a good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me, Saksha Faridi. And for now, the market has been in a tight range during the trading session. We are just around that 19,750 mark. We went closer to 19,800, but then lost the steam from those levels and slipped quite a bit. The broader markets are doing all right today, so there's a bit of an outperformance when it comes to the broader market, especially the entire power sector is quite active. Not only the NTPC, SJVN of the world on account of the Goldman Sachs report, but you also have a lot of these, cable companies doing well. Polycab came out with a blowout set of numbers, and that had a rub-off impact on the likes of KEI, Havells, as well as Fidelix Cables. Havells, of course, will come out with its earnings tomorrow. The Street is banking in a lot right now. They banked a lot as far as Bank of Maharashtra is concerned as well, but that came out with a great set of numbers. Again, quite a bit of improvement as far as profitability is concerned, as far as the asset ratio, and that has spurred the rally across the PSU banking names. So we are seeing quite a bit of momentum on the PSU banking index as well. In fact, it's one of the top sectoral gainers. Quickly, let's take stock of some of the earnings that came just in the last 15-20 minutes, starting with Mastech itself. There is a growth of around 2.5% on a sequential basis, but this is much lower than what the company has been reporting. Last quarter, there was a growth of almost 5% on a sequential basis, after which we had seen a solid rally on Mastech. Today, it's a bit somber. Premier Explosives, that one is exploding as we speak. It's 10% higher, reported a great set of numbers again. So that stock is suddenly seeing a vertical move up. And then Jubilant Pharmova is the other one I want to talk about. That one reported, I think, a bit of a decline on a year-on-year basis. At least the revenue was actually up 9%, but then you have the margins sliding by almost 250 basis points, and that's the reason the net profit has come in a lot lower. And as a result reaction, we're seeing that stock holding down with a cut of almost 3 to 4%. So continues to be very, very earnings specific, Aisha, as well as stock specific.
Oh yeah, it is, and the power sector is the one which is clearly powering ahead. Look at Tata Power, SJVN, NTPC. And mind you, the brokerages are pretty much still split and divided when it comes to this one. Goldman Sachs, for instance, has initiated a sell on Tata Power, which is why Tata Power perhaps is in the red, a target price of 190. On SJV and NTPC, it's a buy call. And these are the stocks which have been buzzing a fair bit today. There's also Havells and Titagarh. Again, brokerage moves on these stocks. Motilal Oswal has initiated a buy, target price of 1580 on Havells yesterday as well. Remember, there was an upgrade on Havells. Stock continues to hold up higher. HSBC has initiated a buy with a target price of 730 on Titagarh. All these stocks are holding out. And then, of course, earnings reactions on a Bank of Maharashtra, on an IndusInd, which we've been seeing pretty much since morning. The NI uptick of 39% for Bank of Maharashtra, and the PAT as well has nearly doubled on a year-on-year basis. That stock holding up quite smartly. IndusInd Bank, a strong Q1. Morgan Stanley maintains their overweight, and that stock as well has been holding higher. Mastech, by the way, is just about delivering its numbers. The consolidated EBITDA, as I see, pretty flattish on a sequential basis. Let me take it across to Kunal and Naresh, though, and try and understand the market texture a little bit better. Kunal, not bad at all, but I guess, consolidation continues, only healthy, I guess.
Yeah, healthy. And, even in this consolidation over the last 2 days, I think yesterday and today, if we look at the net gains on the index, we're still making a pattern of higher highs and higher lows. So we managed to protect yesterday's low even on a marginal basis, and we managed to cross above the yesterday's high. And I think we've repeated this pattern over the last 5 or 6 trading sessions from the time the Nifty has managed to break out of the 19,350, 300 support range. So I think that's again a healthy sign for the overall markets, that we are maintaining the uptrend and we are maintaining the pattern of making a higher high and higher low for the index, even in the phase of a mild consolidation. Now, we discussed yesterday that there has to be a tweak in terms of the strategy, where traders have to look out for buying stocks which are going into a support or a contra correction. So I think that's a better strategy in this kind of a market, because we've seen over the last couple of days that breakout stocks are actually seeing a pause post the breakout. They go into a mild correction and then they pick up price action. So I think a better strategy, or would stick to the strategy of buying stocks which are into a corrective phase, and especially in a sector which is looking quite strong. So that's the only strategy tweak which is required in a market which is consolidative.
Okay, buy the stocks which are showing a bit of a correction will give you a better opportunity to get in, but what you're not getting the opportunity to get in today is the entire cables and wire space. That's seeing quite a bit of buying action, whether it's a Fidelix Cables, which is up 8%, KEI, which is hit a, if I have it right, record high level as well, plus the other names, Polycab, which is sitting at record high, solid run since the number itself, and then Havells, which come out with its earnings tomorrow, and then smaller ones like Universal Cable, etc., are also seeing quite a bit of traction. Let's go across to my colleague Ansh to find out what exactly is which is spurring this move in the stocks, and what are the triggers lined up. Ansh?
So in this volatile market, cable and wire is the sector which is booming. There's strong buying happening in this space, and we can see strong buying in KEI Industries, Universal Cables, Precision Wire, Phenolix Cables, Polycab and Havells. So according to us, there could be 5 top reasons which could be contributing in the buying of this particular sector. Firstly is Polycab results. The company has posted strong results. The revenue has rose by around 42%, whereas PAT has jumped by around 80%. So because of this strong results, there's good positivity in overall space. Secondly, brokerages. So there are brokerage houses who are positive on this particular industry. Jefferies has maintained a buy signal on Polycab, whereas UBS has upgraded their rating from neutral to buy on Havells. So when they think that this particular space is going to do well in coming time. Third is copper prices. So if you see the copper prices chart, you will see that copper prices has dropped by around 6% on quarter-on-quarter basis, which supports this particular industry. Fifth reason is power sector. As per channel check, planned power sector is expected to create a financing opportunity of around 98,000 by financial year 2030. And power sector has direct correlation with wire and cable sector, which is going to give good support to the sector. Also, there's one more reason of real estate. As per channel check, there is strong growth in the sector. Also, the cash collection is expected to remain strong. And there are many new launches which are coming in the coming time. Also, if you see the data, Nifty Realty is the top sectoral gainer on year to date. It has rose by around 25%. So all of this reason could contribute to the buying in this particular sector.
Well, yes, it has, and this is one space which is holding out very well, be it a Havells, be it a Polycab. All these stocks are looking extremely smart in trade. Kunal, we were looking at the charts of Havells yesterday as well. Further momentum, you think?
Yeah, looks like, and hopefully post results, I would expect that the cluster of resistance or the zone which is acting as an impediment for the stock price, which is around the 1400 mark, I think that should get taken out. So the stock had earlier attempted towards that 1400 level almost a month back. I think the month of June, mid of June, it tried to consolidate over there, but could not muster the strength to break past about that 1400 levels. It fell down towards 1250, 1260 mark, and now is back again closer to that 1400 level. So I'm expecting that if this time around the 1400 level gets taken out, we could be looking at the entire fall of 150 points getting replicated on the upside for Havells. So as a patient investor or a trader, you have to wait out for that breakout above 1400 levels. But whenever that happens, even if it's on a gap up opening for Havells, that should be an opportunity to jump in as well as to look to trade on the long side.
Okay, that's Havells going strong. In fact, just today we spoke with the management of Polycab as well after their numbers. We will quickly bring up that soundbite as well up for you. But like Ansh was highlighting, brokerages as well have given it a clear thumbs up after its earnings. We will quickly take it across to Naresh. And Naresh, on the charts of Polycab, this has been pretty actively traded off late, and today too sitting on a gain of 5%.
So after this move, it's become a little speculative. The volumes have been higher. The delivery volumes have been relatively lower. So at these levels of 4,300 plus, it's time to book profits. It was at 3,600 just 6 to 7 sessions back. So from 3,600 to 4,300 plus for the stock. The stock is overdone in the near term. Would not be a short candidate given the momentum, but it could see a fade off, go towards 4,100 to 3,900 in the short term.
Coming in, of course, Havells will come out with its numbers tomorrow as well. Has been a bit disappointing, but over the last couple of days, there has been positive action. Yesterday, it was UBS, and today, Motilal Oswal has initiated coverage. But since we are talking about result reactions, let's listen in to the management of Nifty Bank, Polycab, as well as ICICI Lombard. They spoke with us today. Listen in to their take on the Q1 performance plus the road and outlook going forward.
We don't need capital. We are very well capitalized as of now. Do you think a bank which has 18.40 as capital adequacy ratio will need capital? our utilizations, our risk-weighted assets have gone down. So your utilization of capital has gone down as a consequence. If you see last quarter, we were at 17.6. We are already at 18.4 because of the risk-weighted assets going down. And we balance our portfolio in such a way that our risk-weighted assets of the portfolio continue to show a decline.
As part of Project Leap guidance till fiscal 26, we have been guiding a range of between 11 to 13%. Considering the leverage benefits, we can assume that range can be slightly improved to 12 to 14%. Volume growth, depending on the product categories and BU, would range anywhere between 50% to 60%, and which is translating into almost 42% growth at the company level and 47% growth in cable and wire business level.
Health definitely is one of the areas of preferred segments of opportunities for growth for ICICI Lombard. I think we have had industry-beating numbers in the context of growth, particularly when you look at for that particular segment. And for us, when I said it's a preferred segment, it is both the employer-employee or let's say the corporate health equally as an area of focus. And the other segment that you referred to in terms of retail health is also an area of opportunity where we have been investing a lot.
Focus on the PSU banking space because that's seeing quite a bit of traction today. In fact, one of the best performing sectors, it's Bank of Maharashtra that came out with a stellar set of numbers. The net income jumped up by almost 95% on a year-on-year basis. There was sizable reduction when it comes to gross NPA as well. It came down to 2.28% versus 2.47%, and even provisioning is down. Naresh, your take as far as Bank of Maharashtra is concerned, and any other name within the PSU banking space that you like?
So Bank of Maharashtra is an interesting chart. The stock has consolidated after that move in December 2022 and now is setting up for a breakout move above that 33 mark. Once that happens, we could go towards 36 to 40 levels. So positive on the stock. And mind you, the stock was at same 30 levels back in 2021 as well. So it's a 2-year breakout. So it looks very promising. And we've seen the whole PSU bank as specifically the extremely small ones like PNB, the ones which had underperformed previously have started taking leadership. PNB just hit a new 52-week high here. And that is interesting on dips. And above all, SBI, which has not made a new all-time high, looks very interesting, 20 points away, 25 points away from an all-time high at 600. That's a 10 rupee risk on SBI, which could go towards an all-time high. In smaller names, Bank of Maharashtra, Indian Bank and PNB look interesting.
Okay, that's the take coming in on some of the PSBs. In the meantime, cap goods, media, power, textiles, that's where all the trading action is this afternoon. We'll slip into a very quick break on that note, come right back. We'll have our fundamental expert as well join in.
पानी से भरी बाल्टी जो जल्दी ऊपर लाएगा वही जीतेगा हर गेम में चैंपियन जैसी पकड़ वही SRMB TMT
Back with closing trades right here on ET now. Definitely off from the highs of today, but 19,800 thereabouts is where we're circling around or in and around that mark really. Power, some of the unusual movers like a media, cap goods, they are the spaces which are seeing a fair amount of traction today. Just look at the individual constituents of the cap goods space and you will get a better sense of how the entire space is panning out. Clubbed, of course, with power, which are the ones which are seeing some big gains coming in. NTPC being one such case in point. Like we just discussed, this Power Grid as well, which has made a decent move. L&T has been holding high. And then SBI as well is looking very, very strong. I don't know when the numbers for SBI, or for that matter, some of these larger PSU banks begin to trickle in. But that's one space which is looking very strong. The one sector, though, which is in the red today and has taken a bit of a breather is perhaps technology. So TCS, Infy and the likes, LTIM, even Reliance for that matter, ahead of the demerger tomorrow. That stock is a little bit lukewarm in trade. Before we take it across to our next expert, Kunal, just a check on Nifty IT.
Well, I think, after that steep run-up of 3 or 4 days for these IT stocks, there is some sort of a sense of large cap IT names entering into the overbought territory. In fact, Infosys specifically is a stock which has actually entered into the overbought territory on the charts. And I would expect that this could be a multi-day correction for Infosys and may not just be an intraday or a one-day correction for the stock price. I would expect possibly Infosys to come back towards at least 1400 to 1420 levels over the very near term. So I think the the better part of the meat for the short-term trading perspective from IT stocks is behind us, and we should now wait for a correction. At least a 3% to 4% correction for Infosys could bring in some good opportunities on a contra buying.
Okay, let's see whether that opportunity of correction comes or not, because of course Infosys will report its numbers tomorrow. The street is expecting that the guidance will be revised a bit from 4 to 7 to 4 to 6. But as far as the top line is concerned, very, very vast range coming in, right from a decline of 1% to a gain of 1%. The consensus, however, is close to 0.7, 0.8% growth. Margins might take a bit of a beating, but we'll wait by and see what the company delivers. Deal wins are also going to be very critical for Infosys this time, because in order to reach that even 4 to 7% growth, the company will have to bag a lot more large deals. We got to hear one yesterday itself, a $2 billion deal coming in, but a lot more will be needed. But let's discuss that and a lot more with Abhiram of BNP Paribas joining us on the show. Hi, thank you so much for making time and speaking with us. If I remember it right, you were still quite positive on IT despite the kind of numbers that we had seen in Q4. Incrementally, what's your view now? Are you still a buyer?
Yes, we are still buyers. And when I say that, I'm obviously talking from a long-term perspective, taking into at least a 12-month view here. Of course, we've had stocks taking a bit of a breather. In fact, more than just a breather, they've actually fallen quite a bit since the last results and then started to recover. But I think the story is just getting started in that sense, because there are a couple of angles here. One is, even if companies have not been reporting good revenue numbers last quarter as well as this quarter, what is quite visible is that the deal win proportions and percentages have actually gone up, and they still look quite healthy. So companies are sitting on good order books. And number two, we're starting to think that the US may not get into a recession, as was the view earlier this year, and in fact may have a soft landing, so to speak. And as a result, the chances are that estimates may turn out to be too bearish towards the end of the year. It's likely that you'll start to see some improvement from the second quarter. And as we head into the second half of the year, things may look a little better than expected.
Interesting. So, Abhiram, is that a blanket call across the IT universe, or would you want to classify as opposed to market cap as well, large or mid?
One of the interesting changes that we've seen in IT, especially over the last 3 to 5 years, is that what we used to traditionally call mid caps or small caps are no longer that small. Historically, we used to talk only about the top 3 or 4 companies when we took calls on deal wins, for example. But now the top 8 to 10 companies are actually competing pretty much in the same market and also winning deals quite well. And what we've also seen with companies beyond the top 4 or 5 is that their execution capability has also improved quite a lot. So in terms of delivery, I think that the names beyond the top 3 or 4 are also very much in our kind of list of companies to watch out for. And in fact, to be fair, their execution has probably been better than the top 2 or 3 companies. So it's exactly a blanket. You've got to be a little more discerning. But in terms of sheer execution, the historical mid caps are doing really well right now.
What's your take regarding the entire home building as well as the entire consumer durable space, whether it was a Polycab or Havells tomorrow perhaps? What's your take? Do you think that this is the best way to play the real estate theme by going towards the building material sector?
Well, in that space, we're actually quite selective, to be fair. There are various angles out there. One of them is the fact that companies have had a bit of an up and down in terms of execution. You've seen also margins move up and down. Competition is also quite high on that in that area. So what we have done actually is look at more diversified players within the consumer durable space, and not just ones that are only in one area, for example, refrigerators or air conditioners and so on and so forth. So a mix of companies which have a good base across various segments is what we've been looking at. So, but to be fair, we've been quite selective in that area. Maybe we've missed out on some of that rally, especially with the cables and wires and so on. But it's not a space that we have been overly bullish on in the past 3 to 6 months.
Okay, interesting. Abhiram, where do you sense that the market is overvaluing a particular pocket or set of stocks, if you will? Because many believe that perhaps auto could be it, and the valuations are looking stretched there.
I mean, autos have had a great run, but in order to answer that question, maybe it's kind of instructive to step back a little bit and see what the overall market backdrop is today. So at the moment, it almost feels like nothing can go wrong, right? I mean, we've had earnings that are keeping pace reasonably well. In fact, we may have had even some small upgrades in the last 1 month or so. If you take the bigger picture outside of India, it does appear that India is a relative performer, standout in terms of the fundamentals and earnings potential, especially compared to, say, China, where the recovery has not been as good as we expected. So the overall macro backdrop is still quite positive for equities. If at all there's a risk that's coming up, it could be later in the year, and part of it could be the fact that this relative attractiveness of India starts to go down as other countries start to work out their inflation and bring that down. And moreover, there is also talk of stimulus in China, which could again lead to a relative trade that we had in the past, maybe last year, where China outperformed India quite significantly. So I think it's fair to sit back and kind of agree that a part of this rally is also led very much by foreign flows, which have no other place to go to in some ways. And if that changes, then the talk of overvaluation in certain areas will come through. I think the space, which still looks good from an overall valuation perspective, like two areas that I think still look good. One of them is financials overall, especially large cap banks. And the second bit is IT, which we already spoke about. Autos, like you mentioned, they've done really well, but we still like the four-wheeler space quite a bit. I mean, at the end of the day, the affluent India story is still playing out. So it's still four-wheelers over two-wheelers for us.
That's the point. But, Abhinav, regarding the entire equity markets itself, what's your take? We are now very close to the 20,000 mark. Do you think that will be the top for the year, or do you see more, legs to the rally, given the fact there's election also next year? So there's a lot of positive momentum that builds up around that.
Well, actually, a couple of data points here to bring up. Firstly, our Nifty target is 19,250. And I say that with a smile because obviously the Nifty is trading above that. Now, historically, what we have noticed is that once the index crosses what we are comfortable with at a target, it means that it's time to start to get a lot more selective. And it does happen that, even if the market does not fall at the moment, because the flows are just is extremely strong, the picture there, there could at least be a consolidation, in my opinion. And maybe towards the second half of the year, investors start to focus a little bit more on the risk. Like you mentioned, as we get closer to the elections, things tend to slow down a little bit on the economy. It's quite natural. That may happen. And as I mentioned to you earlier, the relative trade of India versus other economies may also start to be questioned a little bit, let's say. And the third bit is, and we're seeing this globally, is that the savings, especially in the US, for example, are still very strong. And as consumers run through their savings, and we think that could happen in the second half sometime, there could be a slowdown in that aspect as well. So I would highlight that most of the risks that we are seeing to this target could be actually global-led and from a relative perspective to India. So the target is unchanged. It's still 19,250. Normally what happens in such a scenario is that the market goes up and down a little bit, consolidates, and maybe you could have the market still somewhere around this level by the end of the year.
So where else in the market are you, feeling that the valuations are looking stretched, or you would recommend profit taking?
Well, I'm still positive on the market, like I said, and from a thematic perspective, it's very hard to think of India not being a good performer over the next 3 to 5 years. But that said, I think mid caps have rallied quite sharply, especially in the last 3 months or so. I mean, the last I checked, I think small and mid caps were up maybe about 16-17% year to date. And that came after, I would say from the lows, they may be even higher. And when such a thing happens, you start to sit back and think, maybe that's the area I want to be a lot more careful of at this point in time. So if at all you're kind of tilting your portfolio, I would say a bias towards larger cap companies, especially those that have stronger management, better cash flows, etc., are the place to go to.
Before I let you go, word on the financials itself, which is the pocket that you think is best placed? Is it NBFCs, PSU banks, private banks, ancillaries like insurance, etc.? Because it's become a very, very vast sector.
No, I agree with you on that. I think I mentioned earlier that we still like the large cap private banks, and there's still a lot more to go in that space. The area that I really have been looking at of late is insurance. You see, these stocks have bounced a lot from March when there were concerns about regulatory-led issues, but between then and now they've bounced quite a bit. Of course, there also it's time to be a little more careful, but I think broadly the large 2-3 names are still looking quite attractive from a long-term perspective. So insurance is the second space. And the third thing you mentioned was NBFCs. I mean, fundamentals are still okay. I mean, there's very little to doubt what could go wrong there. But again, stocks have rallied quite a lot. In fact, year to date, many of the smaller NBFCs have rallied quite a bit. That's a space where I'll be a little more careful of, but I still think the large NBFCs have potential to give upside.
Great to have you on the show as always. Thanks for taking the time out. Let's just revisit what the market is currently at. We're still pretty quiet right now in trade, but hovering around that 19,800 print, at least for the futures. But India's auto sector, that's clearly on a growth path. After registering record sales, companies are now preparing for the coming festival season as well. However, companies are also keeping a close watch on monsoon and the macroeconomic developments, as well as exports to some markets, which are also a matter of key concern. To discuss all of this and much more, my colleague Sumit Chaturvedi caught up with Prasanth Firoria, who is the MD and CEO at Force Motors.
Post-COVID, the recovery has come back pretty well, especially in segments in which we operate as an OEM, which are predominantly shared mobility segments, were significantly affected during the COVID period. So even for us, the key segments are, tour and travel, staff transport and IT, or school buses. These were our critical segments and were completely flat. However, in the last 1 year, there's been very good recovery, and the year looks very promising. Overall, business is looking much, much better.
Talking about the monsoons, well, this year we have seen rain around the country better than what sometimes was predicted. El Nino was also there, fear was there, but it hasn't happened so far. What's your outlook as far as impact of good monsoon or rains on rural sales?
As you know, the Indian economy is significantly, focused towards rural, economic generation. And from that perspective, monsoon is very critical. Fortunately, we've been, so far the monsoon looks good, which is a very positive indicator for the economy. So it looks like the year should be a good year.
An auto component sector, one sector that has reaped the benefit over the last few years. What's overall outlook of the auto component sector? Because you are in that segment also, apart from being an OEM and CV player. What's the outlook on especially on the auto component sector and its demand, which is going to meet?
The auto sector is significantly riding on the OEM side. But generally, things are looking good. There is a small correction that you can see in the heavy segment currently. There is a small correction in terms of slowdown you can see also on the tractors currently. But generally, from an auto component perspective, especially for companies who are not just focused in India, but who are exporting significantly, situation is a little concerning because globally there is a slowdown. The US economies have started to slow down. You see a lot of slowdown in the European market. So from an export perspective, as a tier one, as a component supplier, it would be important to wait and watch and see how things progress. But as far as India goes, as far as the Indian industry, the automotive industry is, so far things are looking comparatively on a strong wicket though.
So, sir, about the launches which we see every second day now in Indian market, there's so much enthusiasm for the new launches and festival season also. What's your thinking over there?
No, clearly, people's expectations, consumers' requirements, preferences are changing very fast. And to keep up with the changing expectations on consumers, you see the significant and rapid change in terms of product launches, upgrades, facelifts that come out. So clearly, product life cycles are getting shorter. In terms of, the festival season coming up, I think should be a good year in general, because there's also been a lot of pent-up demand coming out of COVID. So while that has been catered to a certain extent, but supply chain challenges, shortages on chips, on electronic components has still kept the supply demand not in sync with what is desired. And with the festive season coming in, I think it should generally looks like a exciting year though.
And about the pre-COVID and post-COVID, if you compare that, recovery has been full, if you say that?
I would say in a lot of the segments, yes, recovery has come back to normalcy. Pent-up demand was there from the COVID period, but generally the recovery is good.
Welcome back. Well, holding on to the green, a bit of a spike in the last few minutes. So let's see what is actually causing that spike. Is it the banking index? Because that was doing all right. Quite a bit of outperformance is what we were seeing already in the broader markets. So now Nifty Bank is also doing its bit. Even in terms of the other internals, we have crossed the 800 mark as far as the Nifty is concerned. Indices Bank is gaining ground. Ultratech Cement is perking up. And of course, NTPC remains your top gainer at the index level. In terms of the banking names, it continues to be PNB, which is higher by 4%, SBI, which is higher by 1.5%, and Bank of Baroda, etc. is also doing well. In fact, the PSU banking space as a whole is something that we have been watching out for. So let's pose that question to Dipan Mehta as well. Dipan, beyond the likes of SBI, which are the other stocks from the PSU banking space that you would look at favorably?
Yeah, good afternoon. Thank you for having me on your show. I think across the board, PSU stocks have been doing well. And in a way, you can paint them with the same brush. I think we have seen them all do badly when the NPA cycle was down and improve thereafter. So I would say all of them are in the same kind of a boat. But from terms of aggression of the management, I think Bank of Baroda looks the most interesting after SBI in terms of their investment in technology platform, branding, as well as finer improvements in terms of performance as compared to their peer group.
Dipan, stay with us. We've got an exclusive news break coming up, and this one might interest many out there on PharmEasy. Sources are telling us that Temasek is actually unlikely to invest in the proposed rights issue. Anurag is here with more details on the same.
Yes, Singapore state investment firm Temasek is unlikely to participate in the equity rights issue proposed by API Holdings, which operates the online drug retailer brand PharmEasy. Temasek is unwilling to increase its stake in PharmEasy. Recently, PharmEasy had proposed a $300 million rights issue to the existing shareholders of the company. Now, the intention of this rights issue is to tide over a spiraling cash burn, which PharmEasy has been facing. And this has been one of the reasons for this cash burn has been the increased competition in this particular space of online retailing of drugs, which has attracted bigger names too. The other use of proceeds from the rights would be to part pay an about 2,000 crore rupee loan which PharmEasy took from Goldman Sachs early last year, which was again to repay an earlier loan to various banks and institutions. It must be mentioned that PharmEasy is also in talks with the Manipal Group, which is a leading healthcare and education company, for a stake sale. And sources have told ET Now that Manipal is seeking to invest at least 1,000 crore rupees in PharmEasy for a stake in the company.
That's the take coming in as far as PharmEasy is concerned. But what's your take regarding the entire diagnostic as well as this, online pharmacy kind of business? Of course, we have MedPlus in the listed space as well. Thyrocare, which is now the parent of, which is actually now a subsidiary of PharmEasy. Within the diagnostics, do you like anything?
No, not really. I think valuations and near-term performance are quite discouraging. From that point of view, the best way to play the healthcare sector would be through the hospitals. Of course, Apollo Hospitals is one of our investments as a matter of disclosure, and it may be trading at rich valuations because of their digital initiatives. But other than that, also, I think if you look at companies like Narayan Rudralay, Max Healthcare, Fortis, I think all of them have reported decent numbers. And these are like nice, great secular growth stories, considering that healthcare spends are only going to move up. So in our opinion, the better way to play healthcare would be through the hospital chain and not the diagnostics.
This earnings season, are you at all, if at all that is, expecting any disappointments to come in? Because, I mean, on the face of it, even IT looked like one, but the market hasn't reacted in such a manner.
No, IT has been a disappointment. You can, just because the market doesn't think so, doesn't mean that the facts on the ground are different. They have reported numbers which are below street expectations, and management commentary has been uncertain. At least this calendar year seems to be gone for the IT sector as such, and it's more like 2024 when we can expect a revival in the growth. There are certainly great medium to long-term growth parameters, or I would say growth engines like AI, but the near-term performance may remain stressed out. Other than that, I think looking forward to maybe some disappointing numbers coming through from maybe the commodities companies as well, considering that a lot of them have been under stress because of lower commodity prices. So apart from that, I think more or less, I think this quarter should be pretty decent as the last quarter was. And we are seeing multiple sectors doing pretty well, and therefore all the other ancillary sectors also doing well, like auto, real estate, banking, NBFC, capital goods. I think all of these large sectors are doing very well. And that does have a kind of a positive impact on all the feeder industries.
Point taken, so that's a take coming in. But in the meantime, let's go across to my colleague Vinny as well. She's standing by to talk to us about which is the stock which is on dealers' radar today. Vinny, talk to us about that. L&T Tech seems to be doing rounds.
Absolutely. L&T Tech is doing the rounds today, and what we are understanding is that reports of fund buying is coming in over. We have two domestic funds that have been seeing some buying and have bought into the stock today. Now the funds can continue to actually buy up to the 37% average delivery in the stock is what we are understanding, as well as at present the delivery in the company is at around 22% as well. Now in terms of the short covering that we are seeing, strong short coverings as we are seeing coming in the futures, and that has started as well. OI is down 13%, while the domestic and FII shares are rising in the stock as well. That is L&T Technology Services, as well as the price breakout are also being seen in the stock as well. So this is the dealer buzz that we are getting in, and this is the stock that we are keeping on the back of that.
Can you tell me what are brokerages now saying about Havells? It's pretty much a consecutive day of upgrades coming in.
Absolutely, consecutive day of upgrades coming in as well, and now Motilal Oswal is also maintaining their rating on Havells as well. They're very positive on the turnaround story coming in for Havells. Let's not forget that Havells will also be reporting its numbers today. So in terms of the cables and wires segment, that is also expected to see a strong growth coming in. Yes, this time around we expected, and what we saw coming in was a muted session in terms of the summer demand trends. But yes, overall we are expecting Havells to see a strong recovery coming in. That's what brokerages are highlighting, whether you look at Motilal Oswal or whether you look at UBS. That too was quite positive on Havells in terms of the commentary that they're expecting from Havells going forward. They expect a strong turnaround story coming in. Even in Lloyd's business, they expect that also will actually start seeing a recovery coming in the next 12 months is what Motilal Oswal has also highlighted. So just keeping an eye out on Havells. Obviously two upgrades and two brokerage notes giving a thumbs up to Havells, but also their earnings coming out tomorrow.
In fact, the entire sector is abuzz after the kind of numbers that we have seen in from Polycab, and that's had a rub-off impact. Dipan, did you get a chance to look at Polycab? It's been called the next Havells.
I don't know. You can't call it the next Havells. Havells is way, way ahead. Polycab's FMEG business is still quite limited and restricted. I think it's on a very low percentage. I think mid-teens or so thereabout. And that also has not been doing as well as the cables business. Havells, on the other end, has got air conditioners, it's got home appliances, it's got kitchen appliances and fans and many other products. And from that point of view, it is quite well diversified. And its diversification is one of the reasons why we have seen slightly stagnant performance compared to its potential for the last few quarters. And Polycab, because the cable industry has done well, that's what is driving the growth over there. So I wouldn't pay a higher P multiple for Polycab because it's a B2B type of a business and a cyclical business with very low entry barriers, whereas Havells is more of a branded player when it comes to appliances across the board. So from that point of view, there's a big distinction. Having said that, I think as I said, the real estate sales are doing very well. Commercial sales are also doing very well, and real estate industry does drive these companies per se. So next few quarters looks very positive for all cable companies. Even KEI's numbers, I think they're waiting for them to report their numbers, should also be excellent. But I think amongst all the stocks with usual disclosure that we and our clients are interested is Apar Industries. From a risk return profile, it is very interesting, and it's got a great export market as well. And this entire trend towards renewable energy is certainly driving sales for its conductor business as well as transformer oil business. And it has a very high performing cable business, cable division as well. So from that point of view, that remains our top pick within the electrical space.
Right. So let's take it across back to Vinny and try and understand what's the street expecting from Unilever. Remember, this is going to be the first of the major FMCG names to announce its numbers. Vinny, what's your poll penciling in?
So yes, in terms of HUL's numbers, what we're expecting is a revenue growth of only around 8%, profit growth of 14%, while margins a slight bit of an expansion of 80 basis points. Let me break it down through what we're expecting in terms of numbers. So volume growth is expected at around 5%. So this time it's going to be like more of a volume-led growth than a pricing-led growth that we've been seeing over the last couple of quarters. We're seeing that reduction coming in terms of the pricing growth, and now it's going to be shifting more towards the volume growth of the company. But that is something that we'll watch out for in terms of commentary as well. Margins expected to improve sequentially as well as on a year-on-year basis. Let's not forget correction coming in the PFD prices, palm oil prices. That's a factor that will be supporting the margins of the company as well. The only place they've taken a price hike is the HFD segment, where the company has taken price hikes because those milk prices, milk inflation has still continued, and that is one of the challenges that one should watch out for from HUL, because that was a concern going on for the company in the last couple of quarters as well. Modest growth expected in the home care as well as the beauty and personal care segment, because in some of the categories like the soap as well as laundry segment, they've taken a bit of a price cut in these segments as well. So keep an eye out on that one. Summer portfolio obviously expected to see a bit of a decline. So that is something like an ice cream segment that could see a bit of an impact coming in. Wait out for the commentary in that as well. Factors to watch out for, obviously demand as well as a margin outlook commentary. There's a new CEO that has come in. So commentary from Rohit Jha, what is the strategy going forward, are the key factors that we are keeping an eye out on as well. What is the traction in the nutrition business, improvement in the rural business, rural recovery, how is that shaping up, are key factors to watch out for.
That was about HUL. Naresh, quickly your take as far as the stock of HUL is concerned, and what about Reliance? We were just tracking it and Kunal is telling us it's less than 10 rupees away from its life highs. Naresh, you'll have to unmute yourself.
So HUL has been stuck in this band of 2600 to 2750. Tried to make an attempt, failed on that one a few days back. So would wait for a sustained move about 2750. But Reliance looks interesting, 10 points away from an all-time high. And 2750 to 2850 was tested 4 times over the last 2 years. So this breakout could be an interesting one going forward. And becomes the leader stock which could take the markets higher also, or keep the base higher. So looks very promising. Any fade off to 2750, 2800 on an adjusted basis would actually be a buying opportunity.
Let's get back to Reliance now, holding up almost 1% in trade. But let's get back to autos. That's clearly where all the action is. And another special interaction with the new head of Jeep India's operations, Aditya Jairaj. He shares with us the company's growth roadmap as well, saying that they have model upgrades which are lined up in this very year itself.
We've got 4 nameplates now. Yeah. We've got 4 strong nameplates. The first task for us is to maximize what we can with our existing nameplates, right? With Compass, Meridian, Wrangler, and Grand Cherokee. So we started building the Grand Cherokee in India last year, 2021. We started building the Wrangler in India. So we have to maximize with what we have first. However, at the same time, consumer needs, consumer demands are increasing, or changing rather. They're changing. So that's something we constantly keep in mind. Our planning process takes this into account. And if the consumers want a certain offering, that's something we capture, and then we'll bring it to market if the case provides. So are we going to increase the lineup in India? At this point, I would say we need to focus on what we have at this point, and we are looking at other offerings where customers will see value.
Okay, so anything before December 2023, any offering that is planned? I guess no.
I'll say this. The answer to that is, You know, we've got actions lined up on our existing products. On our existing products, we've got actions lined up, which you will see before the end of 2023.
Okay, so that's something that we will be waiting for. But Aditya, in the India growth story, one new fuel engine is what the auto enthusiasts are looking forward to, is the EV segment. Why so is that Jeep India is not present in the EV segment yet, because from all other brands, be it the entry car segment, car companies, or from the luxury, we have the offerings of electric vehicles. What's the India strategy when it comes to EV, and what sort of ideology that the company has on the electric vehicle side?
Perfect. So when you talk about EVs, the value proposition needs to exist right with the customer at the center. So this is something we take into account constantly while developing what our near-term and medium-term product strategy is. So today, consumers in different segments are asking for EVs. This is something we're taking into account while putting together our near-term strategy. So simple answer to your question, with Jeep India, EVs will come.
Okay, so that was about Jeep India, but just coming back to the markets and tracking all that is happening. Of course, Reliance is one stock that we have our eyes glued to, because that one can hit that all-time high level any moment now. So, of course, watching out for that. But nonetheless, the Nifty is comfortably above 19,800 as we speak. NTPC, Bajaj Finance, Ultratech Cement, these are some of your names. You know what, Dipan, I wanted your view regarding the power sector and the entire smart metering and the entire wave that we are looking at right now. Would you look at being a buyer in any of these names, or again one of those green shoots that we keep talking about but doesn't really materialize?
See, I think I can see NTPC chart on your screen, and that's really an interesting company. And I just want to say that given the kind of response which is there, the market is going to PSU stocks. I think NTPC also can ride that wave. Unfortunately, numbers are very mixed. Sometimes it comes with a good quarter. Sometimes the numbers are not that great. But there is underlying value in the stock in terms of dividend yield, in terms of actual assets on the ground. And my sense is that the street will notice the stock as it improves its revenues from the renewable business. And all the focus of the management is on trying to grow the renewable asset base per se. And as and when I think that plays out, you may see an improvement in the price to earnings multiple of NTPC as well. So I'm very positive on that stock, considering that the kind of P multiple it is available at. And hopefully, I think more and more ESG efforts will draw a better quality of investors into the stock as well.
Nifty has made a fresh record high for itself, and I can see the futures are only now 150 points away from the 20,000 mark. 19,852 is where we're currently at, and the Nifty is well now higher by 89 points as we speak. And I think it's single-handedly Reliance which is actually pushing the index up, because if you were to map the intraday graph, it's pretty much a similar pattern there. 28.45. So we're what now, Kunal? Only 5 points away, right, from that all-time peak, or more?
For Reliance?
Reliance.
Yeah, 56.5 is the high. So we are 6 points away technically.
But tomorrow it'll all get undone, right? Because you'll have the price discovery for Jio Financial as well.
So yes, price discovery for Jio Financial, price discovery for Reliance Industries, in the sense how much reduction the stock price would probably get into, and then new contracts would be established. So what's actually happening today is that all three series, July, August as well as September, all three of them are getting expired. And because it's a physical settlement, all of these contracts will have to be physically settled today. And we were discussing this in the morning, that there has been almost 1.5 crores of reduction of open interest on Reliance in last 10 days, which means traders were already trying to do this unwinding of positioning on futures and buying this on delivery, and that's why the stock was up 150 points.
Yeah, so all of it will get undone. We shouldn't get excited about Reliance touching a new peak.
No. It's a genuine new high which is happening for the stock price, because it's more a delivery-based buying. In fact, tomorrow,
irrespective of the price discovery, which is right now accounting for a combined value.
It's a technical adjustment. Yeah. So it's like a double-legged adjustment. You have to sell futures, you buy in cash. Tomorrow, traders would jump onto futures back again.
Got it. Okay, that's Reliance in trade for you. 28.47 is where we're currently at. But yeah, that said, there are other levers as well that the market is seeing for itself. Look at Bajaj Finance, for instance. That's also scaling higher. Another 2.5% bump up for that stock too. 7,600 is where Bajaj Finance also is in trade. There's IndusInd Bank, of course, reacting positively to its numbers. ITC, SBI, they're looking good. L&T has been a strong one. Almost a 1% move there as well. And a couple of these pharma names too are seeing some dots of green along with cement. Ultratech Cement is the one which is one amongst the top 5 movers on the index. From within the broader end of the market, there's of course Polycab, but fresh renewal in an Indian hotels. That's spiked up 4% no less, by the way. There's PNB. Look at the move that you're seeing on PNB. That's closing in at its day's high, and it's not like it had a very strong session up until I think the last 2 hours or so. It's shot up about 4% there as well. And SBI Card is the other one, which is seeing a big spike along with Astral, which has been also very, very actively traded off late. 3.5% of an uptick coming in on Astral as well. Naresh, before we wind up for the day, a trade on the index?
So it would be a buy on Bank Nifty, which looks promising for a move towards 46,500.
Okay, let's begin winding up for the day. Dipan, we'll let you go on that note. Kunal, Naresh, thanks as always also for taking the time out. By the way, one must, look at how the global markets as well are panning out, because it's a very, very strong move that you're seeing across the global screen. About 1.5% to 1% a piece kind of move is what you're seeing for the European markets as well. For our markets too, closing in at the highest point in the day, a fresh record high, 19,850 plus levels for the Nifty futures. NTPC, Bajaj Finance, IndusInd Bank, Finserv, Ultratech Cement, Sun Pharma, ITC, SBI, and then of course Reliance Industries, which has seen a mammoth move today, pulling the Nifty up to a record close. The broader end of the market as well has looked very good, with sectors like media, cap goods, real estate, power, financials, textiles, all participating in today's move. And then of course the market has had its fair share of losers as well. IT, for instance, took a bit of a breather today. ICICI Bank was not participating at all, quiet. LTIM as well was an underperformer, as was Wipro, Infi, TechM and TCS. Not much of a move coming in for Adani Enterprises, for Axis Bank. HDFC Bank as well was less than 0.5% of a mover. But yeah, the Nifty's managed to do it alone, thanks to Reliance and some of the key heavyweights like I outlined. But that's pretty much it on this edition of Closing Trades. We'll see you with all the market action tomorrow morning at 8 a.m.